On Insurance Digest, we're taking the seal of Education Endowment and Compulsory Insurance Group Life. Well, my guest is no stranger to the microphone. He's been here severally, and he's going to be letting us in on how we can understand all of this. I'm talking about Akinjide Orimolade, who is the Managing Director, Chief Executive, Stanbic IBTC Insurance, and he's right here with us in the studios. He's also member, Governing Council for the Nigerian Insurers Association. Mr. Orimolade, it's nice to have you back in the studios. Good morning.
Good morning, Mr. Victor Terry. It's good to be here, and good morning, our listeners.
Great. So I know that you've been part of this advocacy crusade for quite a while now. The last time you were here was sometime in May 2024. So how would you assess the insurance industry as it stands today?
Right, great. I would say since May 2024, that's over a year ago, there has been tremendous changes within the insurance industry. There was the new Insurance Industry Reforms Act 2025 that was just passed. I would say kudos to our president, the members of the Senate, and also the House of Reps, and also our regulator NICOM that was able to fast track in terms of the way the bill came into light. And I will say again, in terms of all the various insurance bodies, the NIA, the CIN, the Inland, the NCRB, they were very, we worked together.
Very instrumental.
Exactly, and then we made sure that, the bill came into light.
Which is very, very good. So, but let's just touch a bit on that reforms, the Nigerian Insurance Industry Reforms Act. Of what significance is this law really, and what changes will this bring to the industry?
Fantastic. I think one of the major highlights of this Reforms Act, it's the protection of the policyholders. Because whether we like it or not, the policyholders are very germane in terms of the growth of the industry. We realize that, policyholders in terms of their claim settlement, it's something that it's very, we take seriously in the market. Okay. So, with this reform Act right now, it has kind of a way protect the policyholders. We set aside 0.25% of our gross premium income. So in case, if any of the insurance companies, if they have issues, not meeting up with their obligations, with this fund, it can be able to address, the claims of the policyholders. That
would be very good. So you're saying that if any insurance company liquidates, for instance, this kind of fund can help out?
Correct. That's it. Then apart from that, in terms of the penetration too, because we realize that, the contribution of the insurance industry to the GDP is still less than 1%. And I think one of the things that this act was able to address, it's in terms of the compulsory insurances. So we have lots of compulsory insurances under the general arm of the business, and also the life aspect of the business.
All right.
And then our regulator right now, they are empowered, unlike before, in terms of these compulsory insurances, there's enforcement. So meaning that if you are not, taking up all these insurances, the regulator can come hard
on you.
Exactly.
So there's a level of enforcement.
Correct. That's it.
And that sounds pretty nice. So that's going to be a game changer for the industry. That's what it means.
Correct.
Let's now dive into the subject of discourse this morning, Mr. Orimolade. What is an endowment policy when talking insurance?
Yeah, fantastic. With the term endowment, it offers two benefits. There's the protection, and also there's the compulsory savings.
Okay, so more or less protection and investment.
And investment, exactly. And, whether we like it or not, when you look at the demographics of this country, either the lower end of the pyramid, the middle, and also the high end of the pyramid, we want a situation whereby we can save, in case maybe we want to meet any obligations in the future, and once you make that compulsory savings, once it gets to the period that you're meant to collect your money, with the accumulated interest, the insurance company will pay you. And then, within that period, if anything happens to that person, maybe the person, as a result of maybe accident or, natural cause, the person is not, the person dies, the insurance company will be able to, pay up in terms of the sum assured that is indicated on the policy.
Wow, that sounds pretty good. So how is endowment linked to education?
Okay, fantastic. I think in answering that, let me just give a scenario, and it's something that I think the insuring public should be able to take a cue from.
Okay.
There used to be someone, along the line,
Okay.
He died. I mean, she died, and
a lady,
exactly. Okay. And then the sister, that's very close to this deceased sister, deceased person, exactly. She had a son, and invariably the sister now said, "Oh, how would she be able to cater for, in terms of the education of this son, which is now the nephew,
right?
Thinking about payment of the school fees, the school uniform, and all the things that has to be associated with the upbringing of the nephew,
right?
But unknowingly to the sister, she didn't know that the disease already had an education endowment in place. And that was the game changer.
Wow.
The insurance person came to the house and said, "Oh, look, your sister already bought, this policy." So with that policy, invariably in terms of the education of the nephew,
right.
That was
guaranteed.
It was guaranteed. So the nephew that had, the ambition of becoming an engineer, right from the secondary school to the university education, the insurance company just paid off. Wow. So that's the essence of education endowment. And it touches every life, every citizen within our country. Either maybe an artisan, either you in the formal sector, either you are maybe in the public sector. I will encourage people to be able to buy this product because it's something that, planning for the education of your children, and then when you are no longer available, definitely the insurance company can be able to step in.
All right, so it helps for students, it helps for institutions as well?
Correct.
So how does it work really? Because people that are listening to us now will be wondering, okay, education endowment, how can I tap into it? Is it like the normal insurance, we do that, we do make the payment every year and all of that? How does it work?
Okay, right. I'll say most secondary schools right now, especially maybe the private secondary schools, part of what they have in their tuition fees, they have more like an insurance, and that insurance is more like the education, endowment. And how does it really help? With these schools, invariably, what they have at the back of their mind is that even if the parents are no longer, available, to be able to finance the education of these children, the funds keeps on coming in. So for that school, in terms of the building of the infrastructure, it won't stop. The infrastructure will still be there, and then they can improve, And then right now that we are talking about, technology, invariably these are things that, these funds, they come in, and then, these schools, they won't think twice. They know that in terms of, upgrading the standard of the education, within that particular, school, they can continue to, upgrade that standard. So it's something that, with institutions, not just secondary school, even universities, because there are some universities that you go and talk to, and they will say, "Oh, fantastic! Why not let's buy into this?" Because they know that in terms of the education of the students that are there, it's something that it won't stop.
Okay,
even if something happens to the parents,
right? So it is meant for save now and then benefit in future, right?
Correct.
Or is it save now and I benefit now?
No, you save now, then based on the term that is involved, you understand? The term that is involved, if you save, you say, okay, you have a policy right now in terms of the education endowment, the minimum period is 5, and the maximum, depending on insurance companies, up to maybe like 20 years or so. So invariably, if you say you want to save for 5 years, at the end of 5 years, if you are still alive, you can collect the funds, and then you can now use the funds. So, my child, is he going to, university right now? I can use the funds to be able to finance it. Is he going to secondary school? I can be able to use the funds to finance it. And then, life is full of uncertainty.
That's right.
If something happens, before, the 5 years, invariably the insurance company will be able to pay.
To take it up.
Exactly. And then the education of the children or the child will still continue.
All right. So, Mr. Orimolade, what I also want to know now, so for parents that are listening to you right now, they have a child in secondary school, let's say GS1. Okay. So, can that fund, if it picks up a 5-year duration, is it for the secondary school, or will it be for the university if it stays for 5 years?
Okay, correct. What I just want to say in respect of that is a child that is in GSS 1, right? Mm-hmm. And it takes up a 5 years. You know that definitely the person will do up to GSS 3 and also SS 3.
That's right.
So that's like 6.
Right.
So invariably, if that parent, does like 5 years, mm-hmm. so that means at SS 2, the parents will be able to collect, in terms of whatever they've paid, okay, with the bonus that will be applied
to it.
Exactly. So at the end of the 5 years, the parents will collect that money and then be able to use it to finance
the university.
At the 6 exactly up to the university education. That's it.
Okay. So that's the way it works.
Exactly.
So it's a minimum of 5 years, right?
Yeah, minimum of 5 years.
And maximum it could be like.
Most insurance companies 20 years, but I'm sure that maybe some they might do up to more than 20, but it's 5 to 20 years.
So let's talk about the premium then. So what premium can be payable? What kind of premium can be suitable for this kind of insurance policy?
Okay, great. The way we've been able to identify it, because we want to cover the whole spectrum of the pyramid,
Right.
So it can address the lower end, the middle end, and also the high end. So in terms of the premium payments, depending on the capacity of the parent, that's number one. Then number two, depending on the age, because age too comes into factor. And then depending on the plan that the parent has for the child. So as rightly said, a parent that wants to start when the child is GSS 1 and wants to do maybe like 10 years, that, maybe from that up to university education. If the person wants to do maybe like 5 years, maybe from that up to, end of the secondary school.
Right.
But the beauty about this, like I said, is that, it's something that you can use. I mean, I know that some parents, they use it even on the 18th birthday or the 21st birthday of the child and say, yes, this is the money I've been able to save, in terms of, your education. And I'm still alive. So this money, I'll just put it into your account. You can imagine on the 18th birthday of the child or the 21st.
Wow.
And the child sees, that's
a big
an
surprise.
alert. Exactly. You say, fantastic. This parent, I mean, you love me so much.
All right. So let's look at that premium now. And I need to put it in perspective. So, can I do a one-off payment premium kind of a thing for the next 5 years or 10 years? Is it possible, or it has to be year in, year out?
Okay, the way the premium is done, depending, you can do monthly.
Okay.
You can do quarterly. You can do half yearly, and you can do yearly, and then you can do the one-off payments, okay, depending on the person's capacity.
So it's possible?
Exactly.
All right. So now, for those that are listening to us, they'd like to have a clearer understanding. So let's assume that the cost that will take my daughter through university, or perhaps my son through university, is 10 million naira. Okay? How much premium will I pay? Am I going to be paying 10 million naira to an insurance group company?
Okay, fantastic. As Riley said, you already have a picture of, in terms of what the education of the child will cost, which is 10 million. And then we'll look at, what is your age right now? And then at the same time, too, how much can you afford? Do you want to be paying the premium on a monthly basis, or you want to be paying it on a quarterly or a half yearly or a yearly basis? Or if it's someone that is very buoyant, you just say, maybe you have you have an education endowment policy for 5 years or for 10 years. And you say, this is the premium you're going to pay for that 5 years or 10 years, and you can afford it. You just pay it, and then you forget about it.
Okay, so why I'm asking that is because when you talk insurance, the premiums are normally very cheap, ridiculously cheap. So you're paying a 15,000 naira for a third-party motor insurance with the assurance of a 3 million minimum in terms of claims, so to say. So and sometimes, even when you are insuring your homes, 0.something% and all this kind of. So I'm asking that because is it the same thing with the education endowment?
Yeah. With education endowment, it's more of benefits, unlike what you have in the general arm of the business, which is a non-life. That is indemnity based. For the life business, because it's benefits, and at the same time it's something that has to involve investment and also protection. The premium, I would say it's on the average level, and then, like I said, depending on the age of the person. If the person is, young,
right,
the premium the person is going to pay will be lower compared to someone that is, maybe up to 50 or above.
Right. So that means age is a factor.
Age is a factor, exactly.
So what's the maximum age of entry for this kind of education endowment policy?
Okay, the maximum age that we normally use is at 60.
Oh.
Yes.
Okay. 60. So you're saying that even I can still do education insurance for my son who's 25?
Yes, you can. You can.
I would have thought he has gone beyond the age.
You can, because invariably, it starts from 18 to 60.
Right.
So at 18 you can start the policy, and then at 60 you can do the policy. But once you're above 60, the insurance company will now say, "Oh, you're getting,
right, above the age." Right?
Exactly.
All right, Mr. Orimolade, the schools are resumed right now. This is September. Secondary schools, they resumed. Some higher institutions are very much. Can people still tap into it at this time, or it's too late already?
I can tell that this is the right time to tap into it. For most insurance companies, including ourselves, when the school resumed, it was just an opportunity for us to, go to all those schools and, tell them about the benefits of taking up education endowment. And like I mentioned, if most schools that they are aware of this product, what they do is that in terms of their tuition fees, it's part of what they put as the tuition fees, before the school resumes, which is a good product for the parents.
Okay, all right then. So we're serving you 2-in-1 this morning. We've touched base with education endowment policy. Let's switch gears to talk about the compulsory insurance group life. We'll be reflecting on that. That will be a little bit after this break, and of course you can also put in your questions or your concerns about all of this. I'm so excited about the education endowment. I don't know about you, but if you are, feel free to connect with us. That will be on 091 5387 7127. I've got someone who's a guru in the building unpacking all of this for us. A brief break. We'll be back.
Mr. Man! Oh, see what you have done now! You have damaged my car!
I'm sorry. I'm so sorry.
I hope you have a good motor insurance.
Yes, I have a third-party motor insurance that will take care of all the repairs.
In fact, the benefits of third-party motor insurance have increased. First, the limit to claims for damages to third-party vehicles has been increased. Secondly, when you get your third-party motor insurance, you automatically get an ECOWAS Brown card, which means your vehicle now has insurance cover across all West African countries. And if ever it is liable on Nigerian roads for damages to a vehicle from any West African country, the premium to be paid for third-party motor insurance for private car owners, it increased from 5,000 naira to 15,000 naira to enable insurers adequately bear the cost of repairs whenever the need arises. Buy your motor insurance. Please log on to www.niip.ng or visit any licensed insurance company today. This is a public enlightenment message from the Nigeria Insurers Association, NIA.
Lagos Traffic Radio 96.1 FM Insurance Digest is a program, and I still have with me in the building Mr. Orimolade, who is the Managing Director and Chief Executive of Stanbic IBTC Insurance. Getting back to Ikorodu Road, those of you coming in from the inner part of Ikorodu this morning, it's a slow-moving traffic being experienced from Odogun up to Koshofe, and that's due to a broken-down high-capacity bus with that's Transit Blue at Koshofe, and of course it's receiving attention as we speak right now. All right, then. We did tell you that within the inner Marina Corridor Leventis in what CMS up to State House is a slow-moving traffic at this time. Thank you so much, Adileye, for that one. Also, let me see, the Lekki Aja Corridor, slow-moving traffic from Chevron up to Ikate, and this as a result of high influx, plus the earlier reported fallen container leading truck at Chisco in Worth Jakonde. It's being recovered at the moment, so Of course, it's affecting some traffic. Well, just take note of that, those of you that are within that corridor as well. All right, so very, very shortly, I will allow you to join the conversation. But before then, let's get to the Compulsory Insurance Group Life. So, Mr. Orimolade, talk to me. What's the Compulsory Group Life Insurance all about?
Thank you very much, Mr. Victor.
All right.
Hello, good morning.
Just a second. Let's take this call. Hello there. Good morning.
Yeah, this is Sadiq Yusuf reporting live from Wemco Road, where we have a lone accident of a Loma compactor truck that ran into the median and affecting our vehicular flow.
Okay.
But not having much impact on traffic that I speak. Through the help of a traffic manager, a recovery van is very much on ground, trying to take this truck out of the road. So and we are still expecting another recovery van so that just to make the process seamless and fast as well.
Okay, so Sadiq, just a second. Where in Wemco Road is this lone accident?
Yeah, exactly before getting to Sunday Market.
Market, okay.
Yes, before approaching Sunday Market, that's where.
All right.
So, but efforts, yes, all hands are on deck just to ensure that it's off the road.
Okay then. All right. Thank you so much, Sadiq.
My pleasure.
Sadiq Yusuf is our live motorbike reporter, and of course, he's been able to comb that corridor just to let you in on that broken down PSP compactor truck. It's receiving attention. By the way, those of you coming in from the Penn Cinema flyover, you might be having it slow by the time you approach Wemco Road. Take note of that. All right, so we're just about touching base with the Compulsory Group Life. Talk to me. What's it about?
Thank you very much. With the Compulsory Group Life, it's one of the insurances that is made compulsory by the PENCOM Act of 2014. That's section 4, subsection 5. And then even with the NERA 2025 too, it's been able to, dwell a lot in terms of that compulsory group life insurance. And, it's just for the employers to know that they have responsibility towards their employees.
Okay.
So any organization, that they have employees that are working with them, it's just for them to be able to take up, this group life insurance, so that in case if anything happens to those employees while they are in employment, maybe death, permanent disability, and then there's some other things that can be added, maybe critical illness. These are the things that are covered, under the group life policy.
Right?
Yeah. So it's something that I'll just employ or maybe try to let every employer of labor to be able to take up this insurance.
How many employees must one have for one to get this?
Yeah, if you have more than 3, that's if you have more than 3, it's something that the organization should be able to take up. Because I know that most SMEs, these are the things that they have in their as part of their insurances, and then even for them to be able to get contracts. These are things that
it is required.
Exactly, they're requirements. So it's something that is compulsory. And like I said, right now we have a regulator that if you don't take up this compulsory insurance, they can come after that organization and they're going to pay a serious fine for it. Yeah, exactly.
Right. So how will it impact businesses and employment?
Okay, for me, I think any employee that that hears that they have an employer that has taken up a group life insurance, first of all, in terms of increasing, even it's something that can motivate them. So in terms of making them to work more, because they look at that their employer has been able to take care of, in case if anything happens to them, they have an insurance that is in place. So in terms of productivity, it's something that can spur them to increase their productivity within the organization. And then coupled with the fact that most insurance companies, even when they take up this, there could be situations whereby in terms of their wellness too, they could have an HR person that could invite the insurance person to come just come and talk to them in terms of wellness, which is another added value to the workforce.
All right, then let's see if we can expand the scope beyond the studios to also have your input this morning. I have the managing director of Stanbic IBTC Insurance in the building, and we are talking all things insurance. But this time around, Two vital policies that will be of great interest to you. We talked about education endowment, and now we're referring to group life insurance. If you have any questions for my guests, feel free to join the conversation. That's on 091 5387 7127. Hello there, good morning.
Yeah, hello.
Yeah, good morning.
Yeah, good morning.
All right, what's your name?
Dakpo.
Dakpo, how you doing?
I'm good. I'm calling from Surulere.
All right, Dakpo, go ahead. Dakpo for Surulere.
So I just want to find out, with school fees increasing every day, this benefit, is it or does it also, will it increase as the school fees increases?
Okay, all right. Thank you so much.
Thank you.
All right, Mr. Orimolade, this guy is very smart. Will school fees increase every day? Will my premium also increase as well?
Thank you so much, Dakpo, for that. One thing about education endowment, like I mentioned earlier, depending on your pockets, and at the same time, depending on the age of the person that is doing it, you can decide to say, I want to take up educational endowment for 5 years, and then in terms of my sum assured, that is after that 5 years, I want to put it as maybe like 5 million. And I know that within that 5 million, even factoring inflation, I know that it's something that it can cater, for the education of my child.
All right.
So it's just for us.
So it depends on your pocket.
It depends on your pocket. So it's just for the insurance company to be able to calculate and say, this is the premium that you are going to pay. Okay. So I'll just advise Mr. Dakpo in respect of this, just have it in mind that, like I said, compulsory savings, and then at the same time, because life is full of uncertainty.
Definitely.
So it offers that investment element, and at the same time, the protection. Yeah, that's
all right,
it.
Then more reactions coming in for you. 09153877127. Insurance Digest is the program. This one says, good morning. If an employee resigns, can they continue the group life policy privately? Jide is sending this one in. Jide, thank you so much. Is that possible?
Thank you very much. I think that's a simple answer. It's capital no.
No.
Because like I said, it's your employer that pays the premium on your behalf. So invariably, if you leave that employment, invariably that's, maybe if you go into another employment, your employer can take up another group life,
all right.
On your behalf. But that it ceases completely.
Completely. All right.
Yes.
Another one here says, good morning, Victor. Does group life insurance cover accidents outside the office or only things that happen at work? Jadesola is sending that one in. Thank you so much, Jadesola, for this.
Fantastic, Jadesola. You see, one thing about group life, it's 24 hours. Okay. You're still in the employment of that organization. So if anything happens to you, you understand, even at home.
It doesn't matter. If I'm at home?
If you're at home, if you have a sleep and then,
you fall.
You fall, exactly.
That's now. Why would the company pay for my negligence at home?
well, invariably, because what it covers is, like I said, death, permanent disability, and then you can,
as long as you still work with that company,
you still work with that organization. All those things are they are covered.
That's something very, very interesting. This one says, if a company refuses to give staff group life insurance, what can employees do? You didn't put your name, but thank you. I think this is a very pertinent question, really, because how do we find out that these companies are really complying?
Okay, very, very good question. I know that most organizations right now, because this policy is compulsory. There's what they call, you can blow the whistle. You don't need to put your name. You can just good a thing. There's traffic radio that a good listener. You could call Mr. Victor Ozeri and say, this particular company XYZ, I've been working there. There's no group life. And I'm sure that one way or the other, the regulator will get to know about it, and then they can step in and sanction that organization.
Which is very, very true. All right, then 09153877127. Hello there. Good morning.
Good morning, Victor.
Good morning.
This is Comrade Daniel Onobumi.
Yeah, Comrade Daniel, one of our regulars on this program. How are you doing?
I'm good, and you?
Very good too. I'm sure you know Mr. Orimolade, right?
Yes, I think somehow I've seen him. Okay. But I've not spoken only.
All right. So what's your question?
Good morning, Mr. Orimolade.
Good morning, sir.
All right. Thanks for coming out to this program and educating us and taking us to the classroom in the area of group life insurance and children educational plan.
All right.
Thank you,
Then
sir.
my idea is on the group life insurance.
Okay.
Though the Pension Act made it compulsory that private labor must take up a group life insurance for their staffs,
All right.
for employees. The challenge here with the industry is some kind of recalcitrant employers of labor who don't see it as compulsory or necessary to take a group insurance because they don't want to just part away with that money because it comes from the employers of labor. Without the employee in terms of group,
Right.
to the what's called retirement plan, which is has to do with the Pension Act.
All right.
We found out that these same employers are so adamant in terms of taking this plan, and I want to ask, what is the industry doing to ensure that there's a way that we have a dedicated number to report such employers? And also see something and say something. When you see something and say something, because it is very important. There are so many out there, especially the private sectors. So what are the industry doing and the regulatory body? Thank you, Mr. Romero.
Very, very good question. Thank you so much, Comrade Daniel. So, any moves now that we have the Nigerian Insurance Industry Reforms Act in place? What are you guys going to be doing just to ensure that people can whistleblow, perhaps through some numbers?
Yeah, thank you very much, sir, for that. I don't see any reason why employers will not take up this policy. But I will say that in terms of what the NIA, which is the Nigerian Insurance Association, in terms of what they are doing right now, and it's something you can easily access their website, and they have a particular email,
and they will have numbers too.
They have numbers, exactly. So employees that they see that their employers are not taking up this policy, they can always send mails, or like I said, they can blow whistle and let NIA be aware. And if NIA is aware, it's just for NIA now to inform the insurance companies, and then there are some insurance companies too that in terms of their numbers, they are easily accessible, and even their website that employees can send this message to. And then once those insurance companies or the NI, once they get wind of this, is just to inform the regulator. And like I said, there are penalties, and those penalties, they are very heavy. Right. You that you are not taking up a group life insurance, for your staff, the annual salary of, the members, that is what you are going to pay. Okay. Which is very heavy. So, like I said, I don't see any reason why employers are not, taking it up.
All right, let me see if I can run through some messages still popping in for you. This one says, please, sir, what is the minimum and maximum duration for this kind of policy? Mr. Edith from Ikeja. Well, if you're talking of education endowment, he did say it's 5 years, and of course, you could have it run for 10, 15, or even 20 years as well. Thank you so much, Mr. Edith. This one says, please, Victor, what happens... Okay, so please, Victor, what is happening at mile 12 inwards Kushofe? Very, very slow. And for Mr. Orimolade, please, for a parent with irregular income, how easy is it to maintain this type of plan? Thanks, Sheon Ibrahim. Sheon Ibrahim, thank you so much. I can tell you that inwards Kushofe, we have a broken down high capacity bus there, and we've been talking about that. I don't know if you're just tuning in. But for a parent who has a regular income, quickly.
Okay, thank you very much, Mr. Sheon, for that. Within the insurance industry, you have those that are in the formal sector, those that are in the informal sector. What we always encourage, parents to do, if you don't have a regular income, invariably, in terms of the premium, you can pay monthly, you can pay quarterly, you can pay half yearly, you can pay yearly, and you can pay at once. There's some organizations, there are some businesses that in terms of maybe the income you will make in a year, by the time you calculate the premium, you say, oh, yes, I can afford to pay this thing in a year. for at once. So you just pay it at once, and then you move on.
So close your mind.
Understand? Exactly.
Okay.
So when situations whereby, you don't have those income coming in, that you've already, paid for the insurance premium for, for that particular policy, which puts you in a good state of mind.
Right. Let's begin to round this all up right now because there's a lot to discuss, and I'm hoping that we can bring you into the studios once again to dissect all of this. But in rounding off, what's your advice to the listening public this morning?
Thank you very much, Mr. Otari. I think what I would just say is that, in life is full of uncertainty, whether we like it or not, we all pray every day, God keeping us. But at the same time, things can happen. And when things happen, the question is, are you prepared?
That's true.
So it's just for you to be able to plan your house, and then when you plan your home very well by taking up insurance, and then what do we value most in life?
Right.
I know that most parents, they will value the education of their children, which is very key,
so
and at the same time too, they value their own lives, and then they value the assets.
Right.
And then what comes into context is, are all these things protected? And then in terms of the premium that you pay, like I said, it's something that is very flexible. Okay. If you don't have too much money on you, you can say, you choose a monthly. If you have a lot of money, you can pay at once. You forget about it.
Okay, then we'll leave it at that for now because of time constraints. Let me say a very big thank you to you for making it through to the studios this morning. Thank you for coming, sir.
Thank you very much, Mr. Terry. It's always good to be here. And I think one thing I will say is that my wife, most times, anytime I drive a car and then I change the station to another, she just tell me that, just put it back at 96.1.
Oh, she's our ardent fan, right?
Exactly.
Mrs. Orimolade, we do appreciate you. We'll celebrate you one of these days. All right, then you can get in contact with NIA by dialing the number 081-7078-4444. That's 081-7078-4444 to whistleblow if your company is not paying the group life insurance policy. Mr. Akinjide, Orimolade, it's nice having you in the building. Thank you so much for being here.
Thank you so much, everyone, and thank you, good listeners.
All right, then. So he's the MD, CEO of Stanbic IBTC Insurance. The program this morning has been produced by Mike James. I say a big thank you to Joke Adeyemi, who's head corporate affairs for the Nigerian Insurers Association. Same for Sajioni, who's controller technical for NIA. From the social media team, I say a big thank you to Daniel Downsi and Okwemi Shodunke. Our executive producer is Tayo Akonle. My name is Victor Terry. Have a splendid day. Bye.